Uh, Hello and welcome everybody. My name is Avinash and welcome to another face-to-face episode where we interview promising corporates from the Indian industry. Today we have a very interesting company from the information and technology space, and which is called Cigniti Technologies Ltd. And we have the pleasure of having the two senior team members of the company with us. Mr. Krishnan Venkatachari, who's the chief financial officer, and Mr. Sairam Vedam, who's the chief marketing officer of the company. Gentlemen, thank you very much for sparing your valuable time and being a part of this show. So, before we start, if you could briefly, give a brief background about the company, and then we could deep dive into the further questions about, your business and your business potential.
Yeah, sure. Saira?
Okay. Thank you, Mr. Avinash. On behalf of Cigniti, we thank for the opportunity. A very high-level introduction. Cigniti Technologies is the world's leading AI and IP-led digital assurance and digital engineering services company. We have been at the forefront of accelerating quality-led digital transformation for global companies for the last 12 years in particular. Close to 70 of global 2000 companies and more than 200 global customers across 24 countries trust Cigniti for three things: accelerating their software quality initiatives as the bedrock of modern day digital transformation. They rely on Cigniti's impeccable all-around digital assurance, quality engineering, DevOps, software testing, automation capabilities, which has been worldwide recognized by the likes of Gartner, Forrester, Nelson Hall, and IDC time and again to ensure that these companies accelerate their market leadership. And the third dimension is our recent pivot into an AI-led, data-led digital engineering, which also positions us now as a unique company, which we claim as quality first, quality-led digital engineering services. And all of these services as an organization are obviously an outcome of 4,100 plus Cignitians worldwide that have been working to ensure the client delight is what we all thrive for. And the collective vision of the organization is to co-create a technology-led transformation for creating better future for organizations who work with us and the society at large. So that's about Cigniti. We are a public limited company, as I outlined. I will let Sir talk some of our financials. And we are led by a well-rounded management, the chairman and managing director, Mr. Subramaniam CV, and the founder CEO, Mr. Srikanth Chakilam, and Krishnan and fellow leaders that we have as part of our management team. And today we are in front of you. I hope, and we are headquartered both the stock exchanges, as you know, and also in Dallas, in the North America, with offices in London, Prague, Singapore, Australia, and so on and so forth. This is a little bit about ourselves. Sir, maybe you want to give a ringside view on some financials of the company.
Yeah. Thank you, Sai. Thanks, Mr. Avinash, for hosting us on the show today. As Sai said, that we are a listed company. We are about close to 25 years old. We did transformations over a period to achieve the current state where we are today. The company was promoted by Mr. Subramaniam as a first generation entrepreneur, and then we were trying to do the all-in sundry software up until 2012 when Srikanth Chakilam came in and then took over the reins of the company to see that how best we can try to segmentize and specialize ourselves, and that is where the QA journey started. And as we are today on the digital engineering, 2012 to 17 has been a year of acceleration, and 17 to 22 has been a year of sustained growth, and 22 onwards we have laid a foundation and journey as to accelerate on a combination of both growth coupled with profitability. Having said that, last year, in spite of the pandemic, gave a good food for thought for us in 2021. We sustained the revenues in 2021, and while the sectoral contributions got a hit that paved way for us to really create and co-create our offerings into the newer areas, which helped us out very clearly to foray into retail healthcare in a bigger way. And the investments necessitated during the pandemic in terms of trying to take a daring step in terms of trying to accelerate the investments in sales and marketing, plus also in the offering side very clearly, has started paving the way. And we could see the sustained efforts of that in 2021-22, where we led a 38% growth in the top line and ended the year at about 168 million. While and the profitability took a marginal shade dip in terms of its own share of contribution from different segments of issues, which we'll discuss as we proceed along. And I think we are now coming back on the track in terms of how do we really pull back on both on the revenue and profitability. While it is so, I think we are on a good path to really move forward. And that is where, in summary, in terms of the financials. And a notable point over the period, if you look through, basically, we are now a debt-free company. We have enough amount of cash and cash equivalents. We have done a successful 2 years in a row dividend distribution. We have also done in the last year, this year, in terms of last financial year, you can call it, but in the current year, that we have done a successful buyback of equity shares of a company, giving exit for the investors wherever it is needed. I think that speaks volume in terms of the company's confidence in the business and in its future.
Yeah, thank you, Mr. Krishnan, and thank you, Mr. Sairam. Very well articulated. My second question would be, if you could now tell us what is the business model of the company? Could you share some insights too? And if one were to differentiate Cigniti with other peers, how would you define that? If you could please, throw some light on that.
Sure. Krishnan sir, can I go ahead on this?
Yeah, please go.
All right. See, first and foremost, we differentiate ourselves as one of those very unique companies who have put software quality at the center of everything that we do, right? So we've evolved as a software testing, quality engineering, DevOps, and then digital assurance company. So in that parlance, our significant differentiator has been how do we accelerate the software quality readiness, which is a significant amount of pivot that modern day companies need to stay digital first or to achieve market leadership. So that's the first point. The size at which we operate, right, as Gartner famously put us, as we are a viable alternative for some of the largest companies the world has seen, right? If a large bank, travel, transportation, retail, manufacturing, insurance, health tech, you name the vertical, we've had customers, right? Historically, as a company, base 200 plus, about 70 of global 2000 companies, there is a singular reason why they work with Cigniti. Our Gartner customer peer ratings stand about 4.8 on 5, which is a reflection of the customer centricity. The agility of the company and the nimbleness and the hunger that we prime ourselves as a 4,100 plus people startup, where the extremely engineering as well as digital engineering that accelerates the service delivery. We have something called Blue Swan, which is a proprietary quality engineering platform that we continue to invest. Our recent acquisition gave us a platform called Zastra, which is a computer vision, video annotation, active learning platform. So no matter which direction that you see, the deep expertise that our technology leaders bring in with decades of experience as functional technology, process automation, and vertical experts, a very strategic partner for quality-led digital transformation. That's our unique differentiation. The last but not the least, the investment into labs worldwide that we have done, the investments into strategic partnerships and alliances that we've created, and most importantly, the global delivery organization, the people that we have with vertical capabilities in terms of centers of excellence, ranging from banking, financial service, retail, healthcare, Internet of Medical Things, travel and transportation, and of late computer vision and AI and data engineering, makes us a very, very strong provider of what I repeat, a quality first digital assurance and digital engineering services portfolio. So that's our approach to market. vertical segments. And globally, we've been rated and ranked by Nelson Hall as the worldwide leader in digital assurance, 6 times into Gartner's Magic Quadrant for our capabilities. And every analyst, Everest Research, IDC, very recently, one of the top tier analyst firms, the report is yet to be public. We are getting again second time worldwide leadership in, and our digital engineering capabilities are on the upswing. So that's our differentiation. I'll let Krishnan to add other dimensions of it.
I think pretty what makes us different in terms of the business. I think what is more important is that what makes difference for the customer, if you look at from the personal touch point, is that the focus of the management directly getting involved out, and whether it's a dollar contract or it's a $1 million contract or a multi-million dollar contract, I think the kind of effort the entire management team tries to provide, and then the kind of uniqueness in terms of the technology where we try to apply and bring on the table, I think that's a key differentiator what comes to the table.
And just to summarize, Avinash, one point, I don't think there is any company of the mix that we have where by evolving from a quality engineering to digital engineering, I think that's a very unique combination, which places us at a strategic cusp of what I call the digital era that companies are getting revolutionized. Clients.
Yeah, I think very nicely articulated by both of you. Now tell me one thing, what is the kind of business scenario currently prevailing, for our kind of product vertical services, and going forward in the next, say, 3 to 5 years, what is the kind of industry opportunity? Currently the short-term headwinds are definitely challenging, but longer term, what is your thought process? How big is this opportunity, and how strong can this industry grow in the verticals in which the company is operating?
I'll let Krishnan sir give some commentary on the current situation that we are seeing, and then I will add on to it. Sir, you might want to give some commentary.
I just want to make a statement out very clear is that we have not positioned ourselves as a vertical player clearly. We are vertical agnostic clearly. While we group and track revenue based on the verticals in terms of what comes, I think we operate out on a horizontal basis very clearly. While it is so that we have built center of excellence across verticals basically, so that we can cater to various verticals across. But I think if you look at it, the biggest strength basically, so that we can do the interchangeability and we are able to move across the levels, whether it is a digital offering or a quality engineering offering or whatever it is. But then comes to the market or the segment where it really looks through clearly in terms of, okay, there could be a headwind which the entire the sector is talking about. It was a tailwind about a year back very clearly, and that is what people are talking about. And today, if you look at it in terms of the headwind, I think it's very clear that as a company, if you understand the need of what the CIO needs very clearly, and if you're able to offer the value addition onto the table very clearly, I think I don't really get worried much about the headwind and the tailwind very clearly. So I think we are in a space where we are not trying to look at a target saying that I'll grow at 50%, 100%, whatever it is, because this percentage on a base really definitely will look skewed out very clearly. We have laid a path and a foundation in terms of both organically and inorganically, how we need to grow at about on an organic basis at about 25% or so, with a clear plan laid out. On that front, in terms of this industry is a fast changing technology. So the fast changing technology, how we start adapting ourselves and getting ourselves prepared internally at the back end, that is the key. And that means that very clearly that if you start adopting and thinking ahead 18 months ahead or 24 months ahead and start looking at what needs to what you need to cater to the market and what next is going to be the market and start looking at it and adapting, I think I don't see the challenges in terms of the headwinds and tailwinds. Yes, there are constraints in the coming times very clearly, and I feel that this will be temporary as it stands. And this is what, in summary, which I would like to comment. Probably, Sairam, you can add.
Yeah, I will certainly add. Thank you, Krishnan. See, first and foremost, right? So let me give some statistics that I'm sure you might be knowing as market observer. The whole digital engineering industry, the digital product engineering industry, on a very conservative note, is estimated to be $300 billion by a Gartner research, right? The digital assurance play that we were doing is a $60 billion thing, and the digital engineering is a $300 billion thing. And this is irrespective about. In fact, as you know, when there is a recessionary looming, it's immaterial that larger corporations depend on technology to be more efficient, right? So that's number one. Then IDC states it very famously that by 2026, enterprises that successfully generate digital innovation will derive 25% of revenue from digital experiences and digital services, which is a clear-cut validation that digital is undoubtedly the way forward. And organizations like Cigniti have a large role to play. See, just look at this, right? 65% of global GDP digitalized by 2022 drives about $6.8 trillion of direct DX investments. This is just the tip of the iceberg that we are seeing, right? So as these wins, consolidate, the fact that, the direct digital transformation investments are about 16.5% CAGR as per the IDC report. So in any angle that you see, what it means is customers fall into two buckets. Renew the old. They can't let away the old. That's called the technical debt. So if you combine both of them, the perennial challenge that companies have is, how do I go digital first today, right? So for which they need providers like Cigniti who understand why is it important for software quality. As Mark Anderson said, software is eating the world, and you can't have bad software crippling brands. So we are very much in demand as a service provider. And then you have these capabilities of AI, data, machine learning, cloud, artificial intelligence, blockchain, user experience, and a whole bunch of digital engineering portfolio things, connected enterprise being a reality. And as Krishnan said, CIO on one side, while the purchase officers in global enterprises are today, along with CIO, the chief digital officers, the chief marketing officers, chief analytics officers, who are all consuming technology vendorship. So Cigniti is in that strategic cusp of serving, and we are looking at the tip of the iceberg. And in the size that we operate, we have a large market that we can significantly confident. And of course, we have to be watchful, and the investments that we make into platform-led models, great human capital, well thought through acquisitions, in our opinion, will propel us into what we call the journey of digital orbit.
Yeah, I think, thank you, Mr. Saira. To add to this answer, I've got another question that, the company has a goal of becoming one of the quality digital service providers, as well as a big player in the assurances market. Now, tell me one thing, what is the kind of growth opportunity in the artificial intelligence and the IoT segments, which you mentioned previously? In these kind of segments, what kind of growth can we expect, the company to grow over the next, say, 3 to 5 years?
Sure. See, I just returned back from the Gartner Summit. Yesterday, I was in Mumbai. Okay, we just finished this 2022 Data Analytics AI Summit. It so happens that I have the latest information that I can talk to, right? So what the whole thing is talking about is, by 2025 globally, 10% of us, I'll just read this for you, right? A simple line from Gartner research. Who establish AI engineering best practices will generate 3x more revenue and value through their AI efforts than 90% of enterprises who do not. What does it mean, right? This is as latest as it can get. So market translates to billions and trillions of dollars, which I spoke about earlier. And the companies which AIify their models versus the companies which do not fall into two buckets, leaders and laggards. And then there is this whole thing of operationalizing, productionalizing AI, for which there are technologies like ML ops, model ops, which translates into how companies today can productionalize AI models. And hence, the summary answer is pretty simple. As Gartner research, just know whatever I read out. If you are doing that, you are on the right side of the efficiency curve. If you're not doing it, you're actually going backwards. Hence, that throws tremendous amount of opportunity, where this session, what Gartner put was called moving the needle through AI engineering. So that's the future, and we are very much doing the right things there. And we have a lot to learn, and we will do that too, whether it is AI-led, low-code test automation, computer vision-led solutions that we are working on, machine learning led transformation that we are looking at through ML ops and model ops. There's a whole bunch of things, advanced, NLP programming, conversational AI. So there's subsegments of this whole thing, which throws us a tremendous amount of opportunity. We have research reports that can be Googled, but I just thought I'll keep it simple. And then that's where Cigniti is leaping ahead. And even in our assurance, digital assurance play, that's why we are the world leader in AI-led digital assurance, AI-led testing. We're not losing focus on that. That's what Nelson Hall said. That's why we are very, very unique. Quality first, AI-led, IP-led, digital assurance, and digital engineering leader.
Fine. As you rightly mentioned, the digital engineering market has a very strong growth opportunity. So if you could, share what is Cigniti's presence here, and over the next, say, 3 to 4 years, what kind of market share would the company aspire to have in this particular segment?
Yeah, both of us, but I'll just keep it very pragmatic. We've just started our journey in the digital engineering thing, right? At this point of time, I will let, we're not yet there in terms of our revenue split and all of that. But what we are definitely doing is close to, we already have about 200 people working on various aspects of digital engineering. But let me put it this way. About 40 customers of us out of the 70 global 2000 companies, which we call our strategic large growth possible customers today, our endeavor is to go and upsell, cross-sell a whole bunch of digital engineering offerings that we have now done through this capability-led acquisition that we have integrated on top of whatever we have been working on in this space in the last 2 years, which means that for a large financial services company, for a digital first, enterprise, for a medtech company, what we are able to do today is we can do cloud transformation, data transformation, blockchain transformation, things like that. I think maybe I'll let Krishnan tell when is that we could be meaningfully looking at the revenue. Okay, so we are very much in line with that. Market share, as I said, we have so much of market to go and garner, so we're very bullish about it from a digital engineering perspective.
Yeah, just to put in perspective very clearly to substantiate the view, we have started the journey, and then if you look at on 168 million revenue, what we have done in the last year, I think about close to roughly about 25 million or so we have garnered out from this segment. And the ambitious path, probably when you're trying to look at a 25% growth over 168 million in the current year, the end state, we would prefer basically at least 25% of it is getting contributed through this. And more, I think that will tilt the scales in our favor in terms of the more the bigger contribution comes from there. One, positioning us as a player. Two, it also gives me a better contribution. And three, I'll be able to establish myself in terms of clearly to move forward and push. And it's quite easy and possible with the existing set of clients, as Sairam suggested, that we have our existing clients who have got the depth of the business very clearly, where we need to, we have the working relationship and then expanding the horizon. Simple.
Okay, fine. I think, this opportunity is very large. Definitely, I think looks very promising. During the quarter, we've seen 13 new clients added to your customer list. If you could give us some background about the type of verticals and the kind of services which the company would be rendering to these clients, if you can give some color on this, please.
Yeah, 13 clients probably, which has been added out in terms of the segments are predominantly on the healthcare, retail, and the
financial services.
Financial services, which we call it as a BFSI, whatever it is. I think, Sairam, you can just chip in and start the briefing in terms of what we offer to them clearly.
Yeah, I'll tell that. So just to give a little color and detail to that, for example, we won one of the largest financial services giant in the US, established back in 1858, right? So this is just one end of the spectrum. So there were about 3 to 4 financial services customers in the UK region. There's an insurance company. We also won a few manufacturing customers, their technology companies, so on and so forth, right? That's the composition of the 13, which again goes back to the statement Krishnan made. We are yet vertical agnostic because the services that we offer are pretty much in demand for every vertical, right? Because no vertical can say, I cannot do software quality, or no vertical say, I don't need digital engineering. So that's number one. What are the services that we are offering? See, there are the strategic DevOps. We call them keep the lights on services. You can't do away with DevOps and cloud migration, performance testing, and test automation on one end, right? We're also doing some very unique stuff in terms of areas around chaos engineering. For some of them, it's actually security testing. A customer that we just recently won, it was in the Canadian region or the US, if I'm not wrong. It is around security testing, right? It's through an RFI, and cybersecurity is a global mandate. So that's a very unique thing that we are doing. And for one of our existing customers, we are on the verge of doing something platformization. And for a couple of our customers, we are talking about cloud migration, cloud modernization. So this is a spectrum of service offerings that we are able to offer to all of these customers. So what, long story short, two things: automation and innovation acceleration. We are just adding value in both those dimensions, with no customer can opt to be doing away with. So this is a reflection of the growth story.
Okay, fine. Now coming to a very important development in the IT sector, I think on the attrition part, if you could tell us, what has been happening on the attrition side on the IT sector, and has this stabilized, or is this now going to continue for a couple of quarters? If you could share your thoughts on this, please.
I'll let Krishnan talk about it first.
So I think if you look at the last 12 months trailing, basically, or last 15 months, attrition has not left anyone spared out very clearly. So attrition has been always the issue. And then if you look at first as an industry, and then what Cigniti is a second story. I think the industry attrition has always been there on the higher side invariably. One, the reasons are best known very clearly, that on account of the tailwind and with so much of availability and availability of the so much availability of business and availability of skilled resources being less very clearly. So it's, that has created clearly. And then with working from home, we also have some amount of practices followed by people invariably. So that also puts a pressure on in terms of the retention cost or whatever it is. But we did anticipate in February, March very clearly that we expected this trend in terms of what is happening around on the attrition to taper down initially as a signs somewhere around July, August. And we expect that this to settle down somewhere in November, December. So as a analysis from our internal reviews and what we have interacted with the people across the globe, we expect that this should taper down, which we have seen a slight bit of tapering down in August. And we expect that in terms of the downtrend stabilizing at around October, November. And the effect of it will be felt from January onwards, where the budgets will be squeezed out by most of these companies from the westernized sector, and that should give some stability. And we have also started seeing people cutting down on the budgets, cutting down on rationalization and various other things happening around. Coming specific to Cigniti, we are not an exemption into it. Last November, our attrition was at about 38%. We had to do a midterm appraisals. We did an appraisal, annual appraisals in April. I think it was in the region of about 15-16% clearly. Post-April, I can probably say that I'm there at about 29%. I'm very happy that it has come down, but as of September, which is good for me, which is really, really good basically, because one, by enhancing my cost, and that is one of the reasons I have foregone on the EBITDA to invest on the people, while I have planned investment on marketing, sales and other costs and technology, which is needed for me to lay a foundation for the future. Well, and that also took a shade of contribution for my reduction in profitability. So we are stabilizing at around 27%, while the aim is also to bring down to 25% and then on to further as much as possible. But I think we feel that for this quarter, next quarter, even if we angle achievable and good for the company, which can really help us.
I think very clearly, articulated by you. Now tell me one thing more, that on the capex side for FY23, what is the kind of capex which we have lined up, and any plans to raise funds, or is the company self-sufficient in terms of the cash balances with you? So aspect?
Yeah. First, I'll address the cash part and then come to the capex part. Cash part of it, if you look at it, basically, we have done a buyback during the year worth about 38 crores with 9 crores of taxation, 47 crores. We have done a dividend declaration of 7 crores. We have done a pay an acquisition which is equivalent to about close to 23 crores. So all this has been paid out from our own sources. And after all that, as it stands today, I have about close to 170 crores of cash sitting in mutual funds and fixed deposits, cash and cash equivalents lying out over there. So we are self-sufficient in terms of cash, and we are generating cash. So absolutely no problem because we don't have any pressure on. It's a need-based capex. While a desktop or a laptop today, we call laptop because it's a virtual office out over there, basically what we buy out clearly. I don't really bother much on this basically because it's a need-based capex which needs to really come through as the resources come in. We need to keep augmenting these resources, which is the rest of the capex. If you look through, basically we have done an adequate investment which is needed when we move from the physical office to a virtual office by investing in security systems and laying down on whatever hardware upgradation or whatever is needed. So we have not planned something like a huge capex for it. Estimated very clearly that it's a need-based capex. So how it translates out, if you look at it basically in terms of measuring it through a depreciation, it is remain more or less standard if you look at over the quarters in terms of where we are, what we are, except for a marginal fraction difference as some batch of computers come in, some batches gets eliminated out. And we don't have a huge commitment for a capex, and we are not a company where we believe in buying lands, storing lands, and start moving around and then investing in buildings. As it stands, we are reinvested back in the business, and that is what is getting us the what do you call the right results. Really, I hope.
Okay. I think very well taken. One kind of top line growth, for the past few quarters, but in terms of the overall EBITDA, profit after tax, there has been a downward trend, obviously for the reasons both of you mentioned. Now, conservatively and on a very realistic kind of basis, when can we expect this trend to reverse? I mean, any possibility that over the next, say, 1 or 2 quarters, trend continuing, on a kind of a nice positive trajectory going forward?
Yeah, thank you. I think it's a good question. So I just wanted to step back a bit of 2021 and 2022. 2021 was a year of pandemic. Every company floated around. While people said that, okay, we have moved up on the margin and value. Our contribution on 1920 from the travel sector was 33%. We were the worst state on the travel sector. We started the order book with 80 million, while we have done a revenue of 123 million. And we still went ahead and closed the year with about 122 million. So which means that we were able to put our hand out of the water and say that, look, I'm surviving. And while doing that, my EBITDA at 15.9%. The EBITDA at 15.9% included huge cost savings on 2 counts. One, no travel, no corporate expenditure, no physical office, a reduction of 5% in salary cost for the employees, clearly. So if I measure all this put together, my EBITDA on a rationalized basis, if I had spent all that probably as well, at about equivalent to the previous year in terms of 123 million at about 14.9, 14.8, around that 15%. On a comparison to the 15%, if you look at it on that, when I've done a growth at about 38%, coming to 163 million in the current year, it counts for 2 reasons. One, I have pressed the button on the acceleration. For that, it is essential that my investments are. Second, there is a one-time expenditure in terms of certain legal cost which has necessitated, which we have won in the courts very recently. And 2 is that yesteryear regulation of the government of 2019-20, some software export incentive and the accounting needed to be accounted as general expenses, which the EBITDA, because that is a 1.5% one-time expenditure. So if I rationalize from 15% to 10.6% what EBITDA which I have achieved in 2021-22, if I jack it up by 1.5%, I'm there at about 12%. The differential 3% consciously we know that we have reinvested in the business, we have reinvested in the people. Coming through in November and April, we know for sure that while every company buffered and told very clearly that yes, we are making profitability in a big way, and we as a company for our size, we said that while we have accelerated, our retention is more important than replacement. And as I told you, 38% was big for our base at people where we are now. So this was necessitated on both the counts. While it is so, I will add a statement here is that my Q1, my EBITDA has moved to 11.8% from what it was at 9.2%, which means that I've shown a 200% increase, a reversal trend. And I am seeing, and though we are listed and I don't want to commit on the numbers, the whole estimated for the year in terms of trying to be at the higher teens of, say, around, we have committed at about 14-15% with a good growth is what I think. We don't see any problem in achieving getting there. We are progressing very well. The numbers looks promising based on the order book and based on the you will see over the quarters, this quarter and coming quarter, things will be coming back to track, and we are also making all our efforts to see that how things can be rationalized and where we can get to the steady state of profitability in growth in profit.
Okay, thank you, Mr. Krishnan. Now is that there is a plan by the company to achieve a revenue target of almost $500 million over the next couple of years. If you could share your thoughts and your strategy as to how is this going to be possible, what are the initiatives the company is taking? If you can share some, color on that, which can explain, how this target is going to be achievable from yours.
Yeah, it's a good question. I'll touch in the overall periphery very clearly that we have an ambitious target clearly. In the ambitious target, the organic growth is priced at about 25%, which runs through from the base where we are at about 168 million in March to a 25% growth year on year over the next couple of years, which is achievable and which we are very confident based on what is happening offerings and then the digital engineering space and so on. We are cautious and optimistic that we are trying to put it at a 25%, while the achievable percentage could be more. While it is so, we also have some plans in terms of pockets of inorganic growth planned very clearly. And we have also come out in the open. Am I evaluating an inorganic proposal now? The answer is yes. Have I finalized something? The answer is no, basically, because it comes through very clearly through the board, and then the appropriate fit which comes through, it will always get delivered through the stock exchanges to the market. But we are very keen, keeping our eyes and ears open very clearly. Predominantly value and little bit skewed towards volume in terms of adding security space or cyber security space or any specialized areas. And we are evaluating day in and day out, and my colleague Sairam is the one who's been really evaluating the proposals systematically. So strategy is both coupled with organic and inorganic growth as a combination. The organic grows at about 25% plus, approximately, plus or minus, and the inorganic, as and when the need arises, it comes through clearly, and that is where we are.
No, fine. I think
you would like to add a few points.
Yeah, Krishnan rightly said, from the inorganic dimension, right? So we constantly are working to look at essentially the 4 buckets, right? So either we are looking significantly on the addition of new competencies and capabilities, also in a way that could augment our existing account revenues, and looking at some anchor account, ensure that it brings in a geography or a nearshore advantage, and of course augmenting to the existing human capital from a digital talent standpoint. And also a key component that we look at from any potential inorganic is their IP and platformization dimension. So that's from an approach. Specific areas around digital product engineering with hyperscaler capabilities in cloud. And then we are also looking at a very specialized bouquet companies in experience design that can build front-end customer experience implementation capabilities, and very to tap into the integrated digital engineering thing. That's how we are looking at, and in our opinion, that but the growth that Krishnan was telling, which we're very confident. So both the levers, when they are turned on, to meet the goals, and we as a management are resilient, adaptive to change, and we constantly are guided by our board.
Yeah, I think thank you. One last question, from my side is that when you talk about mergers and acquisitions, Mr. Sairam, what kind of valuations, comfort has come in the market as of now? If you could give a, because now with the IT sector going through a lot of challenging headwinds, is the merger and acquisition market getting more attractive? From an acquisition point of view, are you looking at very interesting companies where valuations are also comfortable according to you? If you could throw some light.
Both of us will answer. While my area of focus, I primarily look at the technology side and the diligence from acquisition valuations. Yes, the valuations are definitely getting a little reasonable, and we have always kept that as a stringent parameter. While acquisition is important, never at the cost of those parameters, but realistic valuations. But I do also want to tell that certain pockets of digital engineering companies still, because of the hyper niche skills that they bring in. So that's how we are looking at specific multiples and etc. I would let Krishnan comment, on that angle.
Yeah, see, I would supplement what Sairam said, is that the multiples part of it, basically it's a market data which is available in terms of past data, in terms of the expectations of. It's a simple theory that when I want to sell, I want the best rate, and when I want to buy, I want the lowest rate. But if you look at the euphoria in which when the consolidation happened in 2021, especially later part of 20 and 21, what we have seen basically is that we have rejected n number of proposals basically based on the crazy valuation, because there was a push in the market in terms of a higher price. While it is so the consolidation of the game, but I see a different set of consolidation now, basically with more and more tightening of budgets coming through. People would like to consolidate and grow in terms of increasing their capabilities. So when it tries to come out around in terms of reviewing the capabilities and joint survival together, I see the trend of tapering down on the valuation basically. So for a services company, I would similar to what we are, with a good amount of double-digit EBITDA. So probably in terms of the top line, probably what was quoting at about 3 times in terms of a normal, kind of a mixed in terms of service. So that should take. That's a kind of a ballpark estimate.
Okay, I think that is fine. And I think, on the valuation side, it means there's a lot of comfort now which is coming in, which is a good sign for you.
Absolutely.
So, gentlemen, thank you very much for your valuable time. I think we had a very enlightening session. Friends, please do watch the video and share it with your friends. We have got a very, good kind of information from, here. And both Mr. Sairam and Mr. Krishnan, thank you very much. And my best wishes to you and the entire team. Thank you.
Yeah. Thank you, Avinash.
Thank you on behalf of Cigniti. You have been a terrific host. We will look forward to keep in touch. Thanks for hosting us.